Hey everybody, welcome to another edition of Insurance Explained with Andrew Perlin. I want to thank everyone who watched the first two videos. Not bad for a brand new show, podcast, whatever you want to call it. Today, I want to talk about the differences between liability only and full coverage when we're talking about auto insurance. I had a phone call the other day. A young kid just bought his very first new car and he was all excited. He called for insurance. We were talking about it and he said to me, I want to make sure I get full coverage. So I asked him, do you know what that means? And he's like, no, I just want to have full coverage. If I'm going to buy insurance, might as well be full coverage. Okay, fine. So that got me thinking that maybe we should have a conversation about what's full coverage and what's not. If you look at any insurance companies or policies, you will notice that there is not one policy that says we are full coverage. What it will cover is what you ask it to cover. Everybody's got a different scenario. There's no right or wrong answer. You just got to know how these things act before you have a problem. Let's take a look at it real quick. We're going to assume for the purposes of this video that you are at fault when we're having this conversation. The very first thing on an auto policy, declaration page, and if you don't know what a declaration page is, when you get a policy from your insurance company, it's pretty thick. But the first handful of pages on there, after it talks about your name and address and who the insurance company is what's going to say declaration page on it. All the declaration page is a sheet or two that talks about the coverage amounts. That's it. The rest of the policy is a legal document talking about what's covered, what's not covered, in a legal sense. The declaration is what's going to tell you the amounts. When you're looking at a deck page, what you're going to see is bodily injury liability. If you're at fault in an accident and you put somebody into a doctor's office or a hospital, that's the money they're going to use to pay for their medical expenses. And should you get sued, that's all coming from the liability portion of it. If you cause damage to somebody, it is your responsibility to make them whole again. That's it. And that's what the insurance policy is going to do. It's going to make them whole to the limit of your policy, which you get to choose. When you look at the liability line, there's either one number and it will say CSL for combined single limit, or there's three numbers and it'd be a number slash another number slash and another number. If it says one number with CSL, that means you have that number for the individual, for the accident, and for property. If you have the three lines, that means you have split limits. The very first number is per individual. So you get into an accident, you're at fault, you put somebody into a doctor's office or a hospital, it's just the one person, they're going to get that first number. If it's more than one person, they're going to get the second number for the entire accident. The third number, that's the property you just damaged. Typically when you get into a car accident, hopefully the worst case scenario is you ruin the car. That comes out of that third number. If that car hits a telephone pole, guardrail, house, whatever, all of that together is going to come out of that third number. Put the doctor's bills for the person is going to come out of the first number. The doctor's bills for the entire accident is going to come out of the second number. So that's what those numbers mean. That's liability. Below liability, you have a PIP. In a PIP, something that not every state will offer. And all PIP is, it's called personal injury protection, and you're allowed to file that PIP claim to help with medical insurance deductibles, lost wages, and things like that. If you file the PIP claim, great. You can always file the liability claim if the PIP isn't enough. Below that, you have uninsured and underinsured motorists. If somebody hits you and they don't have enough insurance to cover your claim, you can file the claim against your policy under the uninsured, underinsured motorist clause. Whatever numbers you have there is how it's going to pay out. It usually matches the bodily injury liability from either a combined single limit or the slash line. Those numbers don't have to be the same. What you can't do is have lower personal injury and higher uninsured motorists. That won't happen. They won't allow that to happen. But you can flip it, having bigger personal injury and lower uninsured motorists. You can totally do that. I don't really recommend it, but I can see why people would want to do that. If that's all you care about, I get into an accident, I want to make sure that I don't get sued to a certain amount of money, and that's what this policy is all about, then liability only is what you need. Liability only is what the motor vehicle of your state requires you to have to register your car, especially in the state that I'm in. That's all I care about. Liability only. Usually the state has a minimum number that you have to hit, and most insurance companies in that state won't offer anything below that because the MVA won't allow it. I don't recommend the minimum limits, and we can get into that at a later time, but that's what liability only means. This policy is not designed to protect me, my bodily injury. It's not designed to protect my car. It's only designed to protect the people that I hit if I'm ever in an accident. That's it. Okay. Now you're saying, but hey, what happens about my car? If I want to get my car fixed, I'm in an accident, I hit a car, my car's damaged, what happens there? This is where the verbiage of full coverage comes into place. To be honest with you, it really shouldn't be called full coverage. It really should be called other than liability, right? Because that's really what you're covering. It's other than liability. This is to fix your car in the event that you're at fault. You don't have to have it. The state doesn't require it. The insurance companies don't care if you have it or not. But if you want your car fixed, this is what you have to add to your liability to get this done. This is what they call full coverage. So when you're looking at the other than liability part, we're talking about the comp deductibles, the collision deductibles, roadside, the rental car, and all that thing that go along with it. The very first one that you're going to look at is comprehensive. So comprehensive is a claim that you will file when something hits your car that's not somebody else's collision. Things like you hit an animal, a tree falls on your car, a rock hits your windshield. That's all comprehensive. If you have comprehensive on your policy, you will file the claim, pay your deductible. The insurance company is either going to total the car if the damage is really high or fix your car. The cool thing about a comp claim is that your rates tend to not go up when you file the comp claim. And we can talk about where to put your deductibles at a later video. Below that is usually collision. Collision is exactly what it sounds like. Collision is when you collide with something moving or stationary. If you file a collision claim, you are 100% at fault. You pay your deductible. The insurance company will then either total the car or fix the car. When you file a collision, your rates will go up at some point. It might not happen immediately, but it will go up as a result of that claim. The other part of full coverage is rental car. You can add rental car to your policy if you want to. You don't have to add rental car. They usually start like $30 a day for 30 days. There's no rental cars in my area that will give you $30 for a rental car. So you're probably looking at more like $40 or $50 a day. And then you have roadside. I would much rather go through a third party to get a much more comprehensive plan, but you can add those if you want. When you combine the liability with the comp deductible, the collision deductible, rental car if you want it, roadside if you want it, you combine those together, that's full coverage. The insurance company does not care which way you go. The state only cares about liability. They do not care about full coverage. Now, you might be asking, who does care about full coverage? The answer is if you are financing your car, your finance company wants you to have full coverage. In fact, not only do they want you to have full coverage or other than liability, they want to know what your deductible is on your collision. When you buy a policy and they ask you, are you financing the car? And you say, yes, I have to put down the finance company. The finance company is going to get notified that there's insurance on this vehicle. They may say, what's your deductible? If you say it's $2,000, they may turn around and say it needs to be $500, which is typically what I see. So when I say liability only, all we're talking about is that top number, liability to somebody else. Bodily injury, uninsured motorist, PIP, that's it. When we're saying other than liability, we're saying comp deductible, collision deductible, roadside, rental car, and that's it. Now, you can have liability only. We've discussed that. Can you have other than comp? 100% you can. It's just that there's no liability. So you should not be driving that car because there's no protection for the other party, which is the whole point of this in the first place. So why would anybody want other than liability only on their car? If the car is registered in the state that you live in, they're going to want insurance on it. Let's say it's broken down and you're not driving it and you don't want to take the registration off it because you're trying to fix it, but it's going to take a while. You remove liability from it, and now you just have other than liability. Keep comprehensive. The only thing that can happen to your car at that point is a comp claim. If you suspend coverage on liability, do not drive that car on the road. Don't do it, because if you get into an accident, there is no coverage. The flip side of that is if it's liability only, that means there's no other than liability. If you get into an accident, the other party will be taken care of to the limit, but your car won't. There's no coverage there. So bear that in mind as you're figuring this out. If you're driving a car that is worth money, only you can answer. If it's worth a couple of $1,000, if you got into an accident and there's no money there and it's total and you got to drop money into this car to get it fixed, then I would tell you, get full coverage. It's just worth it because either they'll fix your car or they'll total your car and give you the value for it. If it's a piece of crap, it just gets me from here and there and I'll be fine. I don't care if I get it back or not, then liability only. The short example I can give you is this. Years ago, we had a van It was beat up because we drove it everywhere. At the end of the day, it wasn't worth a whole lot, maybe $1,500 tops, but it worked and got me where I needed to go. So I put liability on it. I didn't care. If I got into an accident, I would just junk it and move on with life. The cars that we're driving now, by contrast, even though they're not brand new, it's still worth some money. I'm going to want that money back in the event something happens because I need to go take that money and buy a new car. So if the answer is, whatever, I care if I get the money back, then liability only all the way, save yourself some money. If the answer is, no, I'm going to want that because I'm going to need that money to buy something else, then it's full coverage or other than liability. Okay, so what it boils down to, every policy should have liability because that's the only way you'll be legal on the road to drive in most likely every state in the country. But if you want to add to your liability, that's where your comp, collision, rental car, and roadside come into play. You tack it on. You don't have to tack them all on, but you got to tack some of them on, depending on what's going on. Will it make your premium higher? Of course it will. Does it give you more protection? Of course it does. Is one better than the other? It just depends on what you're trying to accomplish. But at the end of the day, that's really it. So I hope this helped. I hope you got a little something out of it. Typically, I see people with full coverage even on older cars because they just don't want to deal with not having their money back in the event that the car got hit. But it's not for everybody. If you have any questions about this, leave a comment below. Subscribe to the channel. That's how we get viewers and how people start seeing this. My main goal is to get some information out to you. If you want me to review any insurance policy that you have, I'll be more than happy to. Shoot me a note and we'll figure out a time to talk. I'll give you my honest opinion. If I can help you out, great. If I can't, it's not the end of the world. But I do want to make sure that everybody is properly insured. I have spent my entire career insuring people and their property. When it's done correctly, it's the greatest thing because you don't have to worry about a thing. If it's not done correctly, you're wasting your money because you are leaving yourself open for liability. All right. Well, I hope everybody enjoyed this video. Like it, share it, and subscribe. My name is Andrew Perlin. This is Insurance Explained, and I will see you guys next time. Take care.